A global semiconductor sell-off is hitting Nasdaq futures this morning, while the Dow remains higher and falling oil prices provide only limited relief. This is the pre-market update for Tuesday, July 28, 2026, updated at 8:03 Eastern Time. The overall market bias is cautiously bearish. Nasdaq-100 futures are down approximately 1.04%. S&P 500 futures are lower by roughly 0.13%. Dow futures are moving in the opposite direction, rising approximately 0.5%. A reliable synchronized Russell 2000 futures quote was not available. The biggest story is the semiconductor sell-off. Chip shares fell sharply across Asia overnight. South Korea's Kospi dropped close to 10%, triggering temporary trading halts. Japan's Nikkei fell roughly 4%. The selling has spread to the United States. Micron is down more than 7% before the bell. Intel is lower by roughly 5.4%. AMD is down almost 5%. Marvell, Supermicrocomputer, Western Digital, and several optical networking companies are also under pressure. NVIDIA is down just over 1%, but it has already traded nearly 2 million shares before the opening bell. Investors are questioning whether the enormous amount of money being spent on data centers, chips, and artificial intelligence infrastructure will deliver enough profit and free cash flow. Competition from Chinese semiconductor companies is adding another layer of risk. The second major driver is big tech earnings. Microsoft, Meta, Amazon, and Apple report later this week. Investors will focus on cloud growth, artificial intelligence revenue, capital spending, margins, and cash generation. If these companies demonstrate strong returns from their investments, technology shares could stabilize. If spending rises faster than revenue and profit, the semiconductor sell-off could deepen. The third major driver is the Federal Reserve. The Fed begins its two-day meeting today and announces its decision Wednesday. Markets currently price approximately a 36% chance of an interest rate increase this week. Most economists still expect no change, but persistent inflation and recent energy volatility have made the meeting unusually uncertain. Oil is providing some relief. Brent crude has fallen to approximately $84 per barrel, down more than 2%. The fragile ceasefire between the United States and Iran continues to hold, and diplomatic talks are ongoing. Lower oil reduces near-term inflation pressure, but it has not been enough to restore confidence in AI and semiconductor stocks. The 10-year Treasury yield is around 4.62%, down several basis points. VX futures are slightly lower. Bitcoin has fallen to approximately $63,400. The economic calendar becomes important after the opening bell. The Conference Board's Consumer Confidence Report is scheduled for 10 o'clock Eastern Time. The previous reading was 91.2. The Richmond Fed Manufacturing Survey is also scheduled for 10 o'clock. A weak confidence number could pressure retailers and consumer discretionary stocks. A stronger result could support the economy but push Treasury yields higher. There are several major earnings reactions. Coca-Cola reported earnings of 97 cents per share, above the 93 cents expected. Comparable revenue reached $13.37 billion, also above estimates. The company raised its annual revenue and profit forecasts, helped by strong demand for zero-sugar beverages, Fairlife products, and World Cup-related sales. Coca-Cola shares are up more than 4% before the bell. PayPal reported adjusted earnings of $1.38 per share, above the $1.28 expected. Revenue reached $8.68 billion, and the company raised its profitability guidance. Boeing reported a larger-than-expected core loss of 76 cents per share. Revenue increased 8% to $24.56 billion, and free cash flow was positive. However, the company recorded another charge related to the delayed Air Force One program. Three stocks deserve the closest attention. The first is Micron. It is down more than 7% on heavy volume and represents the clearest liquid expression of the memory chip sell-off. The second is Corning. The stock is down approximately 16% following earnings, with nearly 1 million shares traded. The large gap creates significant trend and reversal potential, but also exceptional risk. The third is Coca-Cola. It is one of the strongest liquid earnings winners and may continue to attract defensive capital while technology remains weak. The biggest market risk is that semiconductor selling spreads into Microsoft, Apple, Amazon, and the broader S&P 500. The strongest positive catalyst is the combination of lower oil prices and lower Treasury yields. The opening strategy is to remain patient. Mark the pre-market high and low. Let the first 5 to 15 minutes establish direction. Require confirmation from semiconductor breadth before following chip stocks. Use smaller size around large gaps and define the stop, target, and maximum daily loss before entering. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.